Welcome back to Nasdaq Trade Talks. We've been coming to you live from the 34th Annual Futures and Options Expo in Chicago. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the Nasdaq booth 427, we have John Fennell, who's the Executive Vice President and Chief Risk Officer over at the Options Clearing Corp. John, thank you so much for joining us here today. Now, as the CRO, you look at enterprise risk all day long. Can you describe what that is and why it's important to OCC?
Yeah, I'd say it's the foundation for secure markets. We're concerned about two things. Not only the financial resilience of the CCP, so worrying about credit, market, liquidity risk, but also the operational resilience. So how are we up 24/7? How are we managing our continuity risks or cyber events and responding to those? Third-party risks. So from a framework perspective as a CRO, I'm making sure that the OCC is managing all its risks so that we can continue to operate, both financially and operationally, and doing that in a way that's consistent with our risk appetite.
You had mentioned liquidity risk, which is a hot topic of conversation at FIA and a number of other industry events. How does OCC manage that, as you mentioned before, because you have to be 24/7.
Yeah, no, I think it's right. And so I think, first of all, we need to make sure that we constantly have access to committed liquidity in the event a clearing member defaults. We need to stop the contagion. So we're the shock absorber. And so the funds that were supposed to go out to another counterparty, if they don't come in from somebody else, we need to step in those shoes and fund those so that the contagion stopped and liquidity doesn't get constrained within the CCP. So that's really important for us. So things we do is really look to forecast and stress test what liquidity events might be, make sure we have sufficient liquid resources on hand, and then as well as if we see aggregations of liquidity risk, we take steps to try to mitigate ahead of time.
What are some of those liquidity resources?
Sure, we've taken a very diversified approach to trying to get those resources because when you call upon them, it's really important that they're there for you. So we recently increased and doubled our liquidity resources by requiring $3 billion from our clearing members as direct cash, which we hold at the Chicago Fed. We have $2 billion from a committed credit facility through a consortium of banks. And the third piece was a little innovative on our part. I'd say we're the first and only CCP today who has sourced liquidity from through a committed repo with CalPERS, a pension fund. Mm-hmm. What's important about that is while the other lines, banks and clearing members have the same risk that OCC has, one of them fails, we're also experiencing stress. The pension line has right-way risk, in that the pension's not experiencing stress at the same time that we are, so it's more secure, and actually we found that it performs pretty well when we test those lines.
How would you define the optimal level of resilience for a CCP like OCC?
CCPs are systemic, and so they have to have the utmost level of resilience. I'll say we are looking at every scenario in between our margin deposits, clearing fund deposits, our operational risk frameworks, and our recovery plans so we can absorb any type of stress that the market experiences. I'll say from a stress testing perspective, this goes maybe a little more tangible. We actually test scenarios that are likelihood of a 1 in 500 type of year event. So that hopefully gives some context of how deep in the tail we really might be in that potential.
Let's talk about OCC as an organization. What kind of work do you do that helps to benefit the exchanges and all the parties that are part of this massive ecosystem?
Sure. When you really stop and think about what's the CCP there for, is to provide confidence to the markets. So what I'm doing and my team is really making sure that we're able to execute financially, operationally, and we can provide that level of confidence to investors. Ultimately, with that confidence, they can trade without worrying about who their counterparties are. That allows the scale, and so that's why you're seeing the market grow and the options business continuing to grow 40 plus years into it.
Well, thank you so much for joining us at the Nasdaq booth. Great to see you as always. And thank you for joining me throughout the day. We're coming to you live from the 34th Annual FIA Expo. I'm Jill Malandrino, Global